Welcome back to another episode of Alpha Commission. Today I'm going to go over the stunning drops that we've been having in the market, even though the Moon Boys had told us that we were going to have a V-shaped recovery and bounce to the moon. We were headed to the moon. Everyone got their helmet on. They got an extra pack of oxygen, and I think they needed it because I'm sure they had a heart attack today as they fell on their asses back to Earth. And of course, yesterday my video was titled that there will be blood. And this looks pretty much like a bleed out to me. What's it look like to you? So, without further ado, I just want to say that, guys, capitulation is not over. It's literally just begun. There are still people in this market who believe in these assets and who are just buying up every single bounce so that they can get dumped on. The reason for my video yesterday was so that you wouldn't be one of those people. And, I got actually the most comments on a video so far. I also got DMs and, different reactions and stuff by people who were very angry that I wasn't ready to go to the moon after we had tagged, approximately 20,000. And I just want to say, guys, that we really need to weed out these people from the industry because, these very hyper leveraged, just, up only kind of mentalities are exactly what's wrong. You know, it's what's wrong with this industry. It's what the industry is taking advantage of, and we really need the realist. We need realists, who are looking at the business operations of these tokens and to understand what's going on. We don't need the Ponzi loving moon boys who just want to start armies and call themselves leaders of the army, whichever token they happen to pluck out because they see, that token's followers as particularly vulnerable to, of course, manipulation by crypto Twitter and by the different YouTubes. And, we need to weed them out. We have to go through a process where those weaker projects die. And of course, one of the hallmarks of capitulation is when you start seeing the institutions, right? Like Celsius and FTX, Alameda, right? When you start seeing, projects failing like Luna, when you start seeing whale groups coming after each other and the market makers and the institutions and all of the smart money starting to fight and trying to be the last survivor where it's eat or be eaten because the winner is going to take billions and the losers are going to disappear forever, right? And that process has just begun. This is going to be a process. It's not going to be a spike down in one day and then we go to the moon. That's not how it works, okay? And I want to just throw a little bit of extra realism your way because again, I get a lot of mad comments, and of course, I don't have time for that. I just delete it immediately. I don't care about those things, but I do want to address it because some of you might be being influenced by those type of people, and we just need to have more realism in this market. We need to have business-minded, rational people, not moon boys, not leaders of any armies, not kings, none of that garbage, okay? We don't need meme lords, right? We don't need that crap, okay? It's time to get serious. This is the bear market, okay? We've got a recession coming up, probably globally, okay? Like, it's time to get to business and stop acting like little, spoiled children who've been playing with free money for a year or two. And now you're going to blame everyone for your problems, right? It's time to do business planning. And part of that is having a realistic outlook of the market and what's possible. So let's go ahead and take a look at the total market cap of crypto, right? I like to use this chart when I see some people around me being unrealistic about what could possibly happen, because the total market cap can kind of give you just a trend of what to possibly expect in a down market. Okay, so let's go ahead and just throw some trend lines on this and across support. Let's say that just like Bitcoin, right? This total market cap may need to come back down to its previous all-time high or potentially lower, but let's not mention that. But let's just say that it gets back down to its previous all-time high where it has support, okay? Or the trend line, of course, that I have drawn here, where it touches almost every single bear market. And if you look at how it's oriented, then at a very minimum, we should expect it to find support in this neighborhood, assuming it's just cutting through this area like a hot knife through butter. We should expect it to find support around 700 and, let's just say $750 billion, right? Off of a high of approximately 3 billion. So, we're talking about a substantial reduction of more than 2/3. And by the way, we actually have the trend line down here. And so we would probably expect, if it fell straight down, if these institutions are just hell-bent on liquidating each other, whether they're trying to go after Michael Saylor, whether they're trying to go after Luna, whether they're trying to go after Celsius, whether, it's any of these things, right? Then we're gonna see like a drop that could be potentially, approximately, $590 billion, $600 billion. And then if we just follow this trend up to that potential support, then we could suggest perhaps 760, right? And so what would that suggest for the market overall? That it could potentially fall another 30% and at a minimum of another approximately 10%, right? So when I say that capitulation is not over, it's not over. We need some projects to die before the smart money and people can come back into the market with a fresh perspective of what an opportunity is and see a good value before them, right? Otherwise, we're just a number hanging up in the air. And while it is possible that we could put in a turnaround like this and have a run, eventually we'll probably come back down to the trend line. And so unless you see that run starting to be put in, we should just assume that there's probably another wave down. And why can I assume that there's going to be another wave down? Well, to be honest, you can't just assume it. It is possible that we found support at our previous all-time high. And one of the ways to see that most clearly is not on these 24/7 exchanges, but actually on the CME chart, where if you take a look here, you can see that we actually almost to the dollar touched the previous all-time high on the CME chart, right, which is the Chicago Mercantile Exchange group. And of course, they are one of the most data-driven and oldest and most respected exchange groups in the world, actually. The whole world comes to them for data. And so when you have a contact like that, it really matters, right? Now, the CME chart isn't very old. It only goes back to 2017. And so the 24-hour exchanges actually are using a lot longer of a data period. And so this may end up being just a temporary hanging up point as we face resistance right here. And then you can see also on this kind of area right here. And most likely, in my opinion, we are going to bust through this because because we are not aligned with these supports on almost any other exchange, only on the CME chart. And while CME does tend to get it more accurately, overall, it would be a little bit premature just to call the bottom, especially when we take into consideration that Bitcoin does tend to have significant, multi phases in its drives down. And so the last time that we were talking, I believe the price of Bitcoin was 21,500. It's now 20,800. And so my warning to you was really clear so that you wouldn't get wrecked. I was talking to you approximately at this price, right? Right here. And I was trying to warn you guys, like based upon all my indications, based upon the total market cap, based upon the global economics, based upon the Federal Reserve, based upon the wars going on between the whale groups and the institutions and the vampire VCs and all of that smart money, you know, uh, the big smart money, they are now starting to go to war. And so this doesn't look over. And you can see it is just trying to push down on the 4 hour. It wants to break this low. It actually did break that low. And that could have us just dropping, right? So, I hope that you took that warning and that you don't hold it against me, unlike some people who like to be a little bit aggressive and negative. I don't worry about that too much, but I did want to explain myself because I think some of them are vulnerable people. I think some of them have been brainwashed by certain influencers and by certain, crypto gurus and leaders of armies and just kind of weirdos out there who don't have a firm grasp on reality. And a lot of vulnerable people can get sucked into these type of markets where they don't feel opportunities, in the real world. And there was, for a temporary amount of time, just easy pickings, just easy money on the table waiting to be grabbed. And if they missed out on it, they may need somebody to blame and they may get manipulated by scammers and other things. So, guys, I'm just here to deliver that daily dose of reality. And the real problem, I think, right now is not, where is not, are we going to go lower? I think everybody in the market has finally caught up with this channel. They're all finally talking about the Federal Reserve and interest rates and the global economy, for the first time for the last month, whereas we've been talking about it for the last, 6 months or longer. I don't even know how long it's been now, but it's been a good half a year. And, while I've felt very prepared for this, and I am uh, personally excited for where these price levels could go so that we could start DCAing in on them, DCAing in together. When we start putting in some accumulation patterns, I think that for most of you, the real problem is that you don't know when to get back into the market. And so you may have now come to terms with what's going on, whereas, there was always the potential to, launch to outer space earlier on, once we've breached certain levels. And let's just say perhaps, perhaps let's see, we could look at a trend line like this just to get an idea of that, where once we've breached this kind of, long-term support and then retested it, and guys, remember I was telling you, like, that was looking like a retest, right? I mean, I strongly warned everyone here. I gave an alarm bell here, strongly warned everyone here, like, that's your last chance to get out. And then when we did this retest, I was just saying, guys, like, the motto of this channel is always be selling, always be taking your profit, right? And I hope you guys did that, because that was the point of last chance. And now I would say it's a bit late to be selling, okay? Like, this was probably the break-even point for a lot of people. And now we're talking about break-even points for people, from like a year or two ago, right? And so, now is not necessarily the time that you want to be selling, but that you actually want to be thinking about DCing in. And we don't know where we're going to break down from this. We actually do have a pretty strong set of diagonals that do show us that we could continue down a channel, but that we are getting pretty close to a bounce area. Let's see, I'm not really sure. Let's see, these are the CME gaps. What's this one? Nope. Oh, yeah, here we go. So I showed you this downward trend that we had. It's just a trend, right? It's just kind of a trend channel that we're in. But you can see we bounce very nicely inside of this trend. Here's the midline, right? Just kind of a midline. And then we kind of bounced inside of it, broke up, crossed that midline, got to the top, started to bounce. We got to that really important line, and we didn't have a full bounce. We broke down from it because we were basically retesting it. And now we're being sent to hell, right? Like, we are in hell now, guys. We are in hell, and I've been talking about how we could get sent to hell for many, many months, and we're now actually in hell. How do you know we're in hell? Because we are below this trend line that I've marked out here. And so we are actually locked into a room of hell, right? And it's going to take quite a bit of time to get out of this. And it's going to take a lot of effort and a lot of money, and a lot of money has to be lost first, okay? And I've shown you what that might look like in the total market cap, just so that you could visualize the amount of money that needs to be lost, right? Something like $250 million more needs to be lost. And so, we're in hell, and all those demons, those vampire VCs, those DeFi fraudsters and scammers, those, exchanges just trying to preserve their own interest the best that they can. All of these whale groups, all of these billionaires, all of these guys are just at each other's throats, trying to acquire the other guy's liquidity, and we are now in crypto hell. So, will this become a crypto winter, or can we have some chance to bounce out of it? It's going to be very difficult to break out of this channel. We are very low in it, and we could end up bouncing down, right? Just like we did this. You could end up seeing us. You can see this is interesting. Like, we actually put a foothold right on that line. And we're right now right on that line. And look where we were consolidating at. Like, right on. Ooh, look at that candle. Consolidated right on it. And we wicked down to the lower one and bounced. And look, we're here. And it looks like it wants to touch the main trend line, right? So again, guys, like, these diagonals can be very important in terms of visualizing where price action might want to go, because it does tend to like this trend, doesn't it? And if we do start to break down from there, perhaps we're going to go down here. And then you can imagine us perhaps bouncing to the middle, and then maybe we find some support, right, around those numbers that I suggested, perhaps at 14,000, or maybe a wick lower just to scare people. Or, maybe we find our foot a little bit higher at 18,000, perhaps even 16,000. It's not really important. It's just that you can kind of think about how the price might move, depending on what might happen in the market. And then, as you can see what happened here, right? We started to use these things as channels to attempt to escape. And while it wasn't able to break out bullishly back in March, when we all had hope that, you know, hopefully we can get out of this, right? But it just was not possible. And so maybe we're going to have another chance at the end of this year if we do have one more breakdown. Then perhaps we could cross up and start breaking up at the end of the year. Um, in my opinion, best case scenario. But perhaps in 2023, worst case scenario, if this bear market and we just go sideways, break out just to the right, not really up or down. But of course, whatever happens with the Federal Reserve, or let's say that the war with Russia ends, something like this, then perhaps we do just have, an amazing spike up that just, does something like this. And by the end of the year, we reach an all-time high, and then perhaps we do a quarterly backfill, right? Kind of like retracing to this line, kind of doing something like this, and then continue on our way. And those type of quarterly backfills really are not, unusual. Like if I can go to the 3-month chart. This chart really isn't that old, but you can kind of see like, we do backfills all the time, right? Let's see if I can get an older chart here. Oh yeah, the BLX. So this is a chart I've shown you before in a different video where I suggested potentially different levels that we could come to, whether it's now or whether it's later in time, like perhaps we would follow this curve. And you can see how price just backfills on a quarterly basis. This is 3 months chart, right? You get these kind of bounces and then you backfill it, bounce, bounce, backfill, right? Bounce, backfill, blah, blah, blah. So we could have a backfill and kind of just take our time to chop this out through 2023 and get kind of stuck in one of these kind of like backfill patterns, sort of like what you saw in 2019, 2020, and then perhaps go on our way at the end of 2023, for a real bull market, or perhaps later, depending on how bad the world economy is and how flat this chart actually gets, right? If it has a little bit more of an upward trajectory, maybe it's sooner. If it has a little bit of a flatter trajectory, then maybe a little bit later. But one thing that we can say is that the world does seem to have a bit of a risk-off mentality right now. And, this is a very engulfing candle to the downside, right? I'll just go back here. You can also see we had a very similar channel back here in 2017 to 2019, right? So these things take time, and then they also take time to recover, and there's usually a backfill. This was actually a technical backfill, right? Quarterly backfill. And same thing, you bounce to the middle, kind of double check it, work your way up to the top, find your way down here. In this case, it found support on this major line and then chopped its way up, and that was a bullish run. But unfortunately, in our case, we have the exact same pattern. Oops, but we broke through support and then bearishly retested it. So that's the main difference between 2018 and 2022. No one else is going to point this out to you. I hope you guys can, easily visualize what I'm talking about so that you understand why I call this crypto hell and why it's kind of a prison and a potential crypto winter that's potentially going to lead to, a very serious amount of effort to get out of it and perhaps a quarterly backfill, which almost always happens in these type of assets anyway, whether it's crypto or other markets. And price just tends to come back to certain levels, whether it's the 786 or the 886. And I've been trying to pay attention to this more because sometimes I don't really pay attention to whether or not I have the log scale on or not. But you can see price came down to the 786 and the 886 if you just pull from that low. And if we consider this a low before this move, then I'm not sure I can measure it like this. Let me turn this off. I told you guys I'm primarily an EMAs trader and I use other indicators, but I'm trying to get into fibs more just because I know that other traders really heavily depend on them. But the 786 here would be approximately 18,000. Somebody was asking me in the comments, where did I get the 18,000 number from? It's just this consolidation area here. And, a little bit of the consolidation at the top of the previous all-time high in 2017, and it aligns with the 786. So while the CME has already hit that, these other charts, might still work its way down to the 786. And then again, because of those quarterly backfills, because of the retracements that you see in the crypto industry, right? What goes up must come down. What goes up must come down. What goes up must come down, right? And so where does it come down to? The 786 and the 886. Now, I've shown you that in a variety of different ways using other methods, such as EMAs and just other metrics. I've shown you to you time and time again, but I really like the presentation that my friend Crypto Retta makes about fibs, and also my friend Crypto Athena. So let's see. So you can see where I'm targeting those numbers, right? Now, I think that 10,000 is a very low number. So when I say 14,000, it's because of this point up here and a little bit of these wicks in this area. That's approximately 14,000. So I'd say 18,000, 14,000, and 10,000 would be on my hit list for potential DCA points. And again, there's just like a million ways to measure these things. There's a million different types of indicators, a million different ways of trading, and you just have to find one that works for you. And typically, you'll know you're on the right track if your various methods are pretty confluent with each other. So I did not use fibs to actually develop these DCA points, but rather I used a different set of logic. It's just you find that they are confluent with those DCA, with those fibs. There's the 18,000 one, there's the 14,000 one, and here's the 10,000 one. Exactly the 786, the 886, and then the in-between point where you have this kind of, possible wick down from the 786. It might not reach the 886, and so perhaps you could catch a wick in this area, right? If we don't retrace all the way down here. After these type of areas are reached, it's not a matter of, people being too scared anymore. It's a matter of people being too greedy. They'll start front running each other on these prices, okay? Because it just represents an extreme value. And unless the use case or if there's a scandal or something like this, unless those things have like totally changed, then what starts as fear up here as we drop down around the 786 turns into greed by the smart money. Of course, the retail is freaked out, but the smart money starts developing extreme greed and they start front running each other. And so that's when you start seeing the accumulation pattern really being put in if you reach those type of areas, right? And so they'll just accumulate at the lows and then people will FOMO after them. There'll be a retrace, they'll, accumulate more, and then however many of those retracements are necessary for them to accumulate everything they want to accumulate, and then they're going to send it, right? And then they'll dump on everyone's head. They'll take profit, and then we'll do a quarterly backfill where they'll accumulate again and do it again, but the next one typically is the real bull run. Okay, this is just like a profit taking point in the middle of this process, and also to double check the supply and demand zones and the validity of the data, all of that stuff. I hope this is giving a lot of you like an interesting perspective on what we're going through together. We are on this journey together, and I appreciate you guys showing your support as well as the various ideas that you've contributed in the Discord, and of course in my friends' Discord where I hang out at the AR Collective. Let's see. So, one of the things that I'd like you to consider, as we kind of target these type of areas, is that, the process could take a minimum of 6 months before you miss anything too serious. Like I know we're, at these DCA areas, but just like I was saying in the previous video, like we can go down further and you have plenty of time. You don't have to feel rushed by anybody, okay? The only reason people rush you is probably because they are ignorant themselves and are just learning themselves, or they have some type of agenda and they're trying to sell you on something, or they need to get rid of their coins and they want to dump on your head, okay? So literally nobody who is honest or ethical is going to be pushing you into any position right now. If they are, they're probably selling you a program, selling you a membership, trying to get you to buy their tokens, or again, trying to dump on your head. For example, whale groups will do this. They'll try to trick retail into FOMOing into, some coin that they spike up, and then they'll dump it down and it'll reach a price even lower than what you entered in, right? And they'll just take all of your money. So again, it's going to take, 6 months to a year, most likely, okay? This suggests 2023 has hope, but 2022 might not unless towards the end of the year for potential, for a real recovery, right? Like a real recovery. Of course, we can have bounces along the way. So yeah, we can have a big relief rally before the end of the year, but we're not going to have the next bull market. And I hope you understand the difference between that. We will most likely have a recession. Okay. And this recession, probably a global recession, will be pretty serious. But then one day, in a couple of months, the Fed will announce that they're not going to increase rates as high as they're doing now. That peak inflation has been met, at least according to their goals. And then, further along than that, because that'll be in a few months, but then it'll take more time than that to recover. They're going to say that they're going to actually cut rates. And at that point, you're going to see the opportunity for the market to take risk on again. The market will be hungry. It might even be starved for some risk, right? After playing around with safe bonds for so long. And it's just going to be amazing opportunities, and you're going to be so happy that you slowly DCA'd in and that you accumulated with the whales as opposed to just being scared out of the market. Okay, so there is hope. Until then, again, nobody should be under the illusion that you missed the bottom or that we're going to be going to an all-time high like right away. If we start having a bull run, you're going to see it, okay? Like if you're sticking around this market, you're going to see it. You're not going to miss anything. You're going to be very smart because just like there could be a bull run, there could also be a collapse of the global economy for a few months, right? Things could get really scary. And so, prices could go even lower. So it's a mixed bag, right? You have to understand your risk there. And you're not going to miss anything. You were already in the hell levels, okay? Like you don't want to just buy your whole bag at one level just because we're here right now. You'll want to, like how the French eat, right? Take a nibble here, take a nibble here, take a nibble here, and then when you see the accumulation pattern, you can start, you know, uh, stuffing some food in your mouth and ride it up to wherever it may be, and then you take your profit. What's the motto here? Take your profit. Always be taking profit. Always be selling. Always be taking your profit, guys. Because if you don't take that profit, I guarantee you, whatever run we have, right? These whales and these institutions and the VCs and the groups, right? All these vampires of the market, they're going to dump on your head, okay? And then when we have the next major pullback and it's like a quarterly backfill, then maybe you can consider, really hodl positions. But you'll be so glad that you took profit at, certain points along the market so that you can continue to DCA in whenever we have a 15% to 20% pullback in prices, whatever asset you're in. And in case the bear market goes on longer than expected because just weird stuff might happen in the world, you never know, right? Then you're going to be glad that you took your profit because some of these projects might die. Just like Luna just died, right? Or randomly just died. Celsius just died, right? Is dying, right? Like some of these projects will just die, and you'll be glad that you took profit on it rather than holding it forever, okay? I don't expect that for Ethereum or Bitcoin, but for almost any other coin, if it could happen to Luna, it can happen to any of them. And you shouldn't be, confused about that. Especially the weirder the project is and the less known it is. And, some of them are going to just have a lot of tokens that they can, release as well. And they're just going to flood the market with tokens. And, even if you buy at a really great price, there's like so many billions of tokens in the supply that it can never actually catch up. The price can never catch up with how many tokens they released. And so you should be using this time to do your research to find out the tokenomics, the team, right? Which projects you think are reliable. And of course, if you stick with me, you stick with the Alpha Commission, then we're going to help you along, on that journey so that you'll be in a good position to make great decisions for yourself later on. But nobody's pushing you into buying anything right now, and don't let anybody do that to you. Let's see. So, like where are we right now? Of course, in the couple days before the Fed meeting, the markets do tend to be risk off, and that's why you can see these type of dramatic drops. Just in case the craziest thing happens, the market tends to be risk off. They take cash off the table. What does that mean? That there is the potential for a bounce here, but just a bounce. I'm not talking about a recovery. I'm talking about a bounce to take profit on. And, we're obviously still falling, which I'm really glad I gave that warning yesterday. And I feel a lot better about it because, some people were giving me a really hard time and they thought I was, once again, like it never fails. You're being too bearish. I get that message over and over again. And, a couple times I got influenced by it because they get into your head, you know what I mean? Like just this moon boy ideology gets into your head and they brainwash you and you start thinking, "Oh, maybe I should be telling people that we're going up." But I'm glad I stuck to my guns and warned people that everything was screaming at me that we were going to continue downward because look at this move, right? Look at this move. We're continuing to go down. And I hope that I saved some people who may have been FOMOing in on this area. I hope I saved some people a lot of money. I hope I saved you a lot of money. That's the type of value I'm trying to bring to this channel every day. I'm not going to get it perfect, but you have to use your own wisdom too, right? It's not on my back to protect your interest. It's just if you would like to combine my insights with yours, I hope that I could be helpful. And so, of course, people are taking cash off the table before those potential meetings with the Federal Reserve because they don't know exactly what's going to happen, right? And so yields are going to continue to rise, like on bonds. Um, there's very little reward to take risk right now. Okay, do you understand? Like, there's so much downside in the economy potentially right now that taking risk has a very small reward associated to it. And so that's why you're seeing things like the 2-year bonds and the 10-year bonds getting inverted, which means, you know, that there's no benefit for taking risk for a longer period of time versus a shorter amount of time. They have almost the same price. I can show you that over here. Let's see. So the 10-year is 3.43%, and then the 2-year is 3.37%. And for one day at least, these prices were almost exactly the same this week. And that suggests the possibility of a recession. Why does it suggest the possibility of recession? Because people are thinking that they can't make money on certain time frames, right? And so whenever you see a yield curve inversion, that's a signal for a possible recession, which is why we saw this dumpage in the market and why those kind of idiot moon boys have no idea what they're talking about. And the people who are just learning these concepts for the first time and who have ridden a bull market fueled by unlimited Fed spending, right? They have no idea about any of this stuff. Okay. I've been in global business as a global business manager, doing international trade, and creating companies for 12 years. Over 12 years with management experience before that, and I do understand these things. It's very important to have a grasp on it and to understand these different cycles. Just crypto has not had one yet, not not of this caliber. And so we'll see where it goes. Hopefully, we find the floor in a reasonable area, but just, you know, don't act against the trend right now. Just be smart, right? Follow what the smart money's doing. Follow how they're thinking. And so let's see. So the smart money sees the potential for the recession based upon these yield curve inversions that are coming up. And so a recession is almost guaranteed, and the market has decided that it's risk off. That's why crypto is dumping. Crypto is a risk. They're risk off. And so, while 75 basis points will probably be good news and then not bad news, a lot of people in crypto are actually reporting that 75 basis points when the Fed had promised to only raise it by 50 basis points. If the Fed raises by 75 basis points, a lot of these crypto influencers just are saying that it's going to crash the market and the Fed is going to crash the market. No, guys, we want them to increase the interest rates because we need them to stave off a recession. We need them to at least shrink the size that the recession is going to be. And so they need to get it to 75 basis points. They need to get it to 100 basis points. And to be honest, they need to get it to, who knows, 200, 350 basis points as soon as possible. They need to be matching the rates of inflation and fighting it hard early on. And what they're doing is they're being too slow and too easy on the economy, or sorry, on the stock market. They're giving the stock market and crypto too much time to adjust. How long has this been since the top of the market? Right? This was November 2021. We're now halfway through 2022. They've given us more than half a year to accommodate our fragile little delicate flowers, you know, in our markets. Well, I'm sorry, but they should have just ripped the Band-Aid off in November and then ripped another one off in January, okay? And just pounded this market so that we could have had just a flash crash that, yeah, I mean, it would have wrecked a lot of stuff up, but that flash crash, it's not about stocks, okay? It's about inflation, and stocks is just a victim of that. There's no way around it. Stocks were the beneficiary of money printing. You understand that? That free money got into stocks and got into crypto. And so, I'm sorry, that's what pumped it up. And so, yeah, fighting inflation brings that stuff down. So, but we would have had a flash crash and we could have had a great quick recovery, but it's too late. It's too late. And so the market is going to be responding well to 75 basis points. And in fact, if they do the lower amount, 50 basis points, it's probably going to cause us to dump further. And then you can probably pretty much expect a continuation of this slow bleed out if they only do 50 basis points for the next couple meetings. And maybe if they do 100 basis points, then it's going to cause some type of flash dump as the market prices in like a higher than expected, like a really high increase compared to what they expected. Double what they expected, basically. So that would cause a dump, but 100 basis points would be seen as a strong Fed doing what it needs to do to at least attempt to stop a really massive recession and at least try to get a hold of inflation as soon as possible. Maybe you can't stop a recession, but you can stop the inflation as much as possible, right? If you really go strong. Yes, that would cause a dump, but it would actually probably trigger a bullish rally after that. And so, again, 75 basis points, probably going to be pretty neutral. Just kind of some sideways action, maybe a little bit of relief rally, maybe a little bit of dump, a little bit of give and take as the market negotiates itself. 50 basis points is going to be seen as potentially disastrous for the economy. And 100 basis points is going to spook the market temporarily, but probably it'll get factored in as, okay, this is good. This is good for the long run. We need this right now. Okay. This has been kind of a long episode, but I do think it's really needed right now. A lot of people need this kind of talk, and I hope it helps you and brings some context to what's going on. We do have some good things going for us. For example, we touched the 200 weekly EMA. Not only that, but we touched the 300 EMA. So, this should have been like a support area, sort of like back here. And so this is a much harder crash than even in COVID and than even in 2018. Like, we didn't really get to this was just a flash in the pan for the 300 EMA. And we didn't really get to the 300 EMA in 2018. So this has been a much more brutal crash than those previous couple times. And calling a bottom is not easy when you have this much momentum down, okay? But we do have some good things going for us, is that that means that we are in these kind of pretty good value areas. And so people are going to start thinking about buying soon. If they haven't yet, they're going to start thinking about buying. We did tag the previous all-time high on the CME, which I already showed you. And so that's good. That's the possibility for a bounce point, right? There could be a temporary bounce from there. We're at the bottom of those logarithmic growth curves, right? So, you have these type of things, and you can see we've wicked down there before, so this isn't to be unexpected. And I did show you that I had my own version, right? Because I don't trust these things. I know Ben Cohen swears by them and a few others, and probably Ben does it a little bit better. He probably has some modified ones that work better. But for me, I'd rather just, use my own brain. And I can see something perhaps like this happening, where, maybe 10,000 is the bottom, the realistic bottom, not this, not this mathematical voodoo, not plan B, not, those type of, pie in the sky where they just want crypto to be like real estate and gold. Um, Crypto is not real estate or gold. It's something totally different. It's more like a tech meme stock, and it just hasn't found the value that real estate or gold has yet. And so it's going to be renegotiated. Okay. These logarithmic, growth curves and stuff have been modeled on, real estate and gold and things like that. But this thing has to find its own model. It has to negotiate with the market, okay? It has to make its own history. And so it's pretty scary for the market that it's breaking down from this logarithmic growth curve. But at some point, it will find a floor. And it is very scary. If you look at this and you're a big investor or you had a lot of your money in this market, it could keep going down and it could even reverse. This might be this rainbow might turn into a real rainbow, right? Like it could go down. It doesn't have to just go up. Who told you that? All right? Who told you that? There's plenty of cryptos that come back down, okay? And so we're going to find out in this global recession, and that's why I don't want you guys to feel pressured. We're doing something weird, okay? Don't let the Moon Boys pressure you. We're doing something weird and we have to find out a new way. Okay, that's why we should stick together and share our ideas and be smart about it, and just throw away the past, whatever happened in the past, just forget about it. We're going to write a new future for crypto and figure out what it's going to be like. Those old models, the plan Bs, the dreams that people had, even what Satoshi envisioned crypto to be, that stuff doesn't matter anymore. We have to choose our own future at this point, and we have to see what the reality of the market can tolerate. And we're going to get stress test, but the truth is going to come out, and then we're going to be able to get through it together now that we haven't FOMO'd in at these huge prices, right? We're going to be taking calculated, small bites of risk as we go along. We're not going to be just FOMOing in and throwing our money into hell. Okay? Going to be being smart about it, guys. And, of course, there are those multiple factors weighing heavy on Ethereum and Bitcoin, such as, I've mentioned them earlier, Three Arrows Capital and Celsius and various other, you know, algorithmic stable coins that are in danger of falling. We've had some major negative crosses, like on the 3-day EMAs, which I've shown you several times. And guess what? They played out 100%. They've played out and they're still playing out, right? There's that 50 and the 200. There's that 20 and the 300, right? So it played out. These drops played out. And I told you they were going to play out. They played out here. Boom, boom. And we got that second wave down, right? That's what I was saying. It's not over yet. There's going to be a second wave down. We're having that second wave down. Um, we have the junk bonds market, which is probably going to implode. The housing market is just dropping and dropping, from home building to sales of homes. Folks, this isn't over yet, okay? There's still likely to be a couple hundred points on the stock market, on the various stock markets that needs to get worked through. Okay, and even if we find temporary support or have a bounce, probably the stock market still has a way to come down, and we're probably going to be negotiating these areas that I've marked in blue. Okay, we might be realizing this fractal that I showed you from a really serious crash in the past. Right? Yeah, there could be a bounce here. Why not? Why not a bounce? But don't think it's over. It's not likely to be over that fast. You can't just snap your fingers and it's going to be over. And I can't believe that all of this stuff is coming true that I've been talking about for like 6 months, 6 or 7 months now. It's gratifying, but at the same time, it's somewhat terrifying because I much would have preferred to be in a bull run. And, since crypto tracks the NASDAQ, the tech heavy NAS 100, it's gonna follow along. It's going to follow along on whatever path that the stocks take. This is just a fractal. It's just my concept of what we could possibly see. It could be worse or it could be more gentle. But I do expect, all of these to come down by, roughly a few hundred points each, more or less, depending on, whatever scale they're using. They all use weird, totally different scales, just confusing as heck. But yeah, I mean, the recession hasn't even begun, guys. Folks, the recession has not even begun in earnest. We're just seeing the tip of the iceberg. So when the real layoffs happen, when you start to know that it's really a recession, not just inflation, then there are going to be bills that people have to pay that they can't pay that are going to come due. And that's when the true capitulation of the market is going to occur. Because people are going to be having to decide between putting food on their table and buying crypto, right? And that's why I wanted you to save your money. That's why I've been warning you for months and months, because I wanted you to preserve that capital for this moment. And I hope that you were able to do that. And I hope that you were able to escape the market. Um, and I hope that, if you have a good job right now, that you're setting some things aside for savings, just in case things get a little weird in the world, right? It could get a little weird. We do have a bunch of gaps on the charts. And again, like I mentioned, usually markets like to fill up those gaps because information is king, right? And so, yeah, we could have bounces in this area. And if it's really good news from the Fed, maybe we could even get all the way up here, right? All these charts are pretty much the same. They're pretty much the same. Got a bunch of gaps along this path or a little bit higher. I don't know if that's really a gap. But anyway, they've got like gaps and stuff on them that would kind of tempt the markets to retest those areas. They just always tend to get filled, almost always. And let's see here. This video has been pretty long, so I think I'll just conclude by saying that the bull market is, of course, where you'll change your life. The bear market, you know, may have many runs in it, right? Like we may enter a bear market and there may be many bounces, but it's really just for, selling, right? Selling those bounces until we have an accumulation pattern, right? That changes direction. And that's when you start accumulating for real, right? If you have some really good projects, then you start accumulating them so that you can take advantage of it on rallies and then buy back on 20% pullbacks, right? And we could fill every CME gap on these charts, everywhere you see a little hole, in the prices, like we could bounce and potentially fill those holes, but don't get fooled, okay? Don't get fooled. That's how a lot of the smart money dumps on the regular retail's head because people FOMO into that stuff. But that stuff's really just for testing prices and then for dumping. So your focus should solely be on the fact that we're, only just now beginning the first point of time in that era of accumulation, okay? We're just now beginning that stage of the path. And in the coming months, we're going to focus on education and projects here at Alpha Commission that may make sense to get into. Nothing too risky, but projects with at least the possibility to grow in value, with the understanding, of course, that many crypto projects may just die in a bear market. Okay. And so we're, again, it's that promise. I'm not going to recommend anything to you guys that I wouldn't recommend to my own mother, and I won't be shilling anything. I'll just be thinking along with you and, making my own decisions along with you guys. So that was your alpha for the day. Stay safe and happy trading.